Hello and welcome to the show Blockleaders.io with me, Gillian Goss. So today my guest is Kein Murcko, who's the founder and CEO of CoinMetro. Now, although we're talking today, we actually spoke over 2 years ago in January 2018. And I've forgotten all about this interview actually until you reminded me. And it's a brilliant interview. I don't mean the writing, I mean the content. And it was lovely because you're searching for the holy grail of regulation. And your point being was that regulation is tough in a traditional fiat world, but it's a minefield in crypto. So have things changed since January 2018, Kevin?
Somewhat. So, I don't think I would have expected in 2018 for them to change fast either, because things in the regulatory front, legislative front, generally don't change fast. But they have been changing. So here locally in Estonia, we actually, shortly after that interview, we started to have conversations back and forth with the finance minister's office here, explaining that the legislation that was on the books was far too lenient. The bar was just too low. And that was going to lead to problems, PR issues for the country, along with people just simply, the problem with having the bar too low is that people that shouldn't get licensed, bad things happen, and then basically everybody gets blamed. And they listened. So we actually helped the finance minister's office rewrite the law.
Wow.
Which now, as of July 1st, so just recently here, all existing license holders have now had to up their game. So fit and proper testing for directors and UBOs, actually have a presence here in Estonia. There's actually capital requirements that there weren't before in place. So while it isn't up to the same bar, let's say, as other financial licenses, it's definitely far closer than it was previously. So that's already a good thing. In terms of, let's say, the Holy Grail, unfortunately, that still doesn't exist. But I guess that's part of searching for the Holy Grail, right? You know, you're never going to find it, kind of. But it's kind of the trying to find it leads you usually to better things. So we've been kind of on the hunt and getting licensed and registered and listed in different countries for the services we provide, the crypto services. In Australia, in the US, money service business registration in the US, along with crypto exchange registration, and also something like a money service business or remitter license in Australia. Also now, because of the changes in the laws in the Netherlands, have applied for similar crypto licensing under the fifth anti-money laundering directive in the Netherlands. And looking at different countries like the UK, like France, like Germany, with their own adaptation of AMLD5, understanding if we need to get licensed, if we're okay not getting licensed because of reverse solicitation, all these great things. So the good thing is that the world has woken up, and as far as regulation goes, and they're starting now to actively apply existing regulation.
So when you say woken up to regulation, is that purely in crypto?
Well, I would say we haven't. I mean, yes. Well, when I'm talking here, yes, this perspective is from the crypto side. We already have enough regulation. I think what regulators are starting to see, what legislators are starting to see, everybody likes to blame the regulator. In reality, it's not the regulator that writes the law. It's the regulator that enforces it, right? So really where it starts is at the legislative body. They're supposed to write laws or adapt or tell the regulator to actually apply existing laws to new businesses or new types of asset classes like crypto, for example. So in that terms, what I meant is just that the world has started now to understand that crypto isn't going away. They've started to look at existing laws or new directives like AMLD5 that came out in the EU and start to apply them directly to crypto, rather than creating these big loopholes, rather than being ambiguous or just creating guidelines. At the end of the day, guidelines don't really help. I mean, because you can choose to follow the guideline or not. And generally those guidelines are rather ambiguous in and of themselves. So you can follow the guideline without really following the guideline. So the good thing is that there's been some structure, and not just in the EU, but elsewhere, regulators and legislators have started to provide structure to these markets, and that's a good thing. That allows for more institutional money to come in, which obviously is needed. But it also means that the retail sector can refine itself a bit, right? So the retail sector is generally underserved in most financial markets. And here in crypto, I would say the same thing. We're underserved as a retail sector. And part of that reason was because of just kind of flimsy regulation. And now we're getting closer to the point where regulation is more understood, not only by, let's say, the legislators and the regulators themselves, but also by the pundits in the industry. So meaning exchanges now understand that they need to do certain things. And new players in the market understand that they need to follow certain laws, et cetera. So we're closer. We're not there yet, but we're close.
Well, it makes sense. I think you're saying too as well is that before people might have thought it was a transient phase, or they didn't really give it proper regard, and it has value. I think that's one of the things the last few years. And if it has value, you need to protect the people getting in and getting out of it, and people, it actually makes sense.
Correct.
So when you say that you help them change the laws or formulate the laws in Estonia, does that mean then that you have a full license now as an exchange?
So before we did, when we talked the last time, we had the FIU, or the FIU licenses that were issued here, which were crypto to fiat exchange. So those licenses still exist. There has been an addition of one license to the roster here in Estonia, which is crypto to crypto exchange. Previously, that wasn't written into the law, so there was a bit of a loophole. So if you were a crypto exchange not dealing in fiat, you did not need the licensing, and that's been closed. So now all exchanges, whether they're crypto to crypto, crypto to fiat, or a hybrid of, need to acquire the new licensing. And the new requirements, like I said, raise the bar. Even as an existing licensee, we were required to send in additional documentation to maintain the current licenses, and we also had to apply for this new crypto to crypto license, as it didn't exist previously, so we didn't have one. So the licensing themselves is still under the FIU, under the guise of the Ministry of Finance. The FSA, which is the main regulator in Estonia, equivalent to, say, the FCA or the SEC in the UK, or the SEC in the US, hasn't yet adopted any crypto licensing. So it's still the Finance Minister's Office and the FIU that control the licensing for crypto here in Estonia. But again, it's a drastically different license from what it was. The hope is that because the bar has been raised, that the public sector, banks mainly, will open up a bit more to crypto, considering that the licensing is closer to that of, let's say, in terms of requirements, is getting closer to that of, let's say, an EMI or a payment institution, or other financial institutions. It's not quite there, but it's definitely leaps and bounds further than where it was in its initial phase in 2017.
So where's CoinMetro now as a platform? So you've had the license 2 years. Give me an idea. You said you're in different countries. Give me an idea of your user base, volumes. Where and what is CoinMetro now? Sure.
So yeah, back when we talked, which I think we had either just or were just about to launch our first products, if I'm not mistaken. And we went ahead. It's been about a little over a year, maybe 18 months now, since we launched our first set of products. And we focused, even since then, we've been focusing a lot still on building out those products. So initially we had, like any company, you have this, idea of the products you wish to launch. And internally you work to put together your customer flow and your UI UX, and then you release it to your clients, and you find out that maybe they don't have the same view of what you were doing than you did. So you go back to the drawing board and try to perfect that to make sure that it works for your user base. So we went through that process. And now we have what I would say is some of the most mature products in the crypto space, going from something like a simple buy, sell, swap dashboard widget where you can quickly move in and out of crypto assets. Mm-hmm. It's not really trading, just, you want to buy some Bitcoin. You have pounds on your account, you have euros on your account, and you simply want to buy Bitcoin or Ethereum or any other asset. You click a button and it's done. Into our exchange platform, which obviously involves a bit more different types of order types. It involves charting, but it's still made for novice. They're for novices. So it's kind of one step up from just wanting to buy an asset or sell an asset. And I would consider it trading, but it's definitely not professional trading or even professional retail. And then our margin platform, which brings in a more derivative kind of product base where you can trade on margin, right? So you can trade on more money than you have on your account, trade on credit, basically. We apply leverage to your account and allow you take some collateral, and you're able to trade a multiple of that amount of collateral and then open additional positions. And that brings in a multitude of new order types, a multitude of even what are called TTL customizations, where you can customize the way your order is filled. It gets quite, let's say, complex for the novice, but for a trader, it gives them tools that allows them to really customize the way they enter and exit the market. And in a market like crypto that's quite illiquid, even the most liquid pairs are still illiquid in terms of, let's say, other traditional financial markets. This gives you the ability to really fine tune so that you don't end up with lots of slippage, you don't end up with pricing that you didn't want, et cetera. So it gets quite complex, but for people that need that, it's welcome, because most platforms don't give you that type of granular access. And we've started to really branch out in different other types of assets and products that we offer to our clients. So at the end of July, actually, we will be releasing in conjunction with a sister company of ours in Montenegro. So last time we talked, actually, I think this was a few months, maybe even 6 months or so, maybe even more, before we came to an agreement with the CMA, which is the regulator in Montenegro, the Capital Market Authority. We helped them create a sandbox. It took about 6 weeks to draft out the sandbox rules with the CMA and get them adopted into law. And the sandbox we then applied to the sandbox as CoinMetro. Were accepted a few months back, actually. It took some time.
You'd expect you would be accepted if you had drafted.
Yeah. Well, in fairness, I went down there not as CoinMetro to draft those laws, right? They have to separate those two things. So I went down as a co-founder of the European Crypto Association, along with another co-founder who was a lawyer by trade, and we helped the government draft the laws.
Wow.
The idea there is to do it that we didn't create the law for any benefit of any single company. We did it in line with what the UK had done, with what Lithuania had done, and we made a few caveats to what we thought was just better for business in general. Once that was done, then we came as our professional selves attached to our companies and applied for licensing. So yes, the application it took a while. We were the first, so for both sides it was a very new process. But at the end of July, early August, we will be launching what we feel is, between ourselves, CoinMetro, and another company called Ignium, which is a DLT-based central securities depository. So it's basically if people don't know what a CSD is, it's where settlements happen. When you buy securities, the settlement, meaning the delivery versus payment, money for securities, doesn't happen at the broker or the exchange level. It happens in the EU at a CSD. So the CSD is who controls that operation. And it's important because if you silo the operation of a CSD, you restrict access to that market from outside of that country or region. And that's what happens with traditional markets. It's like if you live in Brazil and want to buy, let's say a stock in a company that exists in Germany, difficult, very difficult. Lots of intermediaries, lots of costs, lots of time. Settlement can take not just days, but weeks, sometimes months, depending on the intermediaries involved. And it just doesn't make any sense in a digital market, right? So us at CoinMetro combined with Ignium, what we will do at the end of July, early August, is do the world's first really end-to-end bond offering, convertible bond offering on DLT. So it'll be the creation of an asset on a blockchain, the then primary sale of that asset, the distribution of that asset on chain, then the secondary market trading of that asset, and settlement in real time, cross-border, all done on DLT technology.
Wow.
So
that's a world first, is it?
I think it is. There's been other bond offerings. There's been other primary markets. There's primary market platforms like Securitize and Tokeny and the likes. The issue with what they've focused on is kind of recreating the traditional market, which is accredited investors in specific markets. Mm-hmm. And what we feel between CoinMetro and Ignium is that that's the problem with traditional markets, in that they're siloed. And that what DLT can really do to improve that is that real-time cross-border kind of agnostic look at the markets. Meaning you can sit, doesn't matter where you sit, doesn't matter where the investor is, you can transact together in real time, 24/7, 365, and get it settled in real time. You don't have to wait 3 days or weeks or months. And it's disintermediated. So the costs are obviously substantially less.
Are you also, does that mean then you're not looking for just accredited investors? Does that get rid of that?
Open to retail. So
open to retail, wow, okay, yeah.
In the first tests, in order to, obviously it doesn't mean that we're getting rid of regulation, right? In Montenegro, you can use reverse solicitation. So according to Montenegrin law, which is almost a carbon copy of MiFID II, as far as the directive goes that governs this sandbox. But according to Montenegrin law, we can do reverse solicitation. So we can onboard whoever we want to onboard. Obviously, though, you also have where the issuer is based and where the investors are based that come into the equation. So unfortunately, no sandbox can get rid of global regulation. That would be amazing, but unfortunately, we can't do that. So in the first instance, to prove that the hypothesis works, we are using the safe harbor rules of the EU. So in the EU, safe harbor rules essentially mean you can transact in an offering up to 8 million euros maximum, depending on the jurisdiction. And you're able to do that without filing a prospectus. Now, some jurisdictions in the EU do require at 5 million, at 2.5 million, everybody has their different thresholds. The directive initially was 8 million, but obviously each member state adjusted as they saw fit. So there are different rules for solicitation, et cetera, around the EU. But in 14 of those countries, it's essentially sending an email to the regulator saying, we're going to be soliciting investors, and you're done. And in 11,
wow. Now, is that a good thing or a bad thing? So without a prospectus?
I would say that, well, it could be either, right? So it depends. It hasn't had an issue up to this point, and that may be because most people, it's been one of those rules that I guess isn't as well known. And you haven't had really platforms come up previously. You've had crowdfunding. Crowdfunding, I would say, is generally similar, though the limitation on crowdfunding around the EU is usually around 1 million euro rather than anything higher. But it's relatively easy to do crowdfunding. So you've seen a lot of platforms pop up in crowdfunding. But in terms of bonds or equity offerings underneath those thresholds, there hasn't been many. So it could be that there hasn't been issues related to investor fraud and things like this because there hasn't simply been that many platforms.
If there isn't a prospectus, how does the purchaser know that it's a real thing? How does it know it's not a scam?
There are documentation rules. So obviously you still need to have terms of service, needs to outline the risks around the investment. Those things need to be outlined. There needs to be, I would say, for general lack of better wording, terms of service, right? That has to include risk disclaimers and the like. And there is a requirement to have some sort of documentation to the investor describing what you're doing, but you do not need to go to the same level as a prospectus. So the rules are quite less stringent in terms of the documentation required. So I think when you're raising 500 million or $1 billion, you obviously, I mean, that is a much larger raise. It's obviously much more risk. And therefore, there has to be additional requirements put in place to make sure that those type of offerings, go as well as they possibly can. Obviously, there's still going to be defaults, et cetera. That's the way the market works. But at the end of the day, there has to be some I say, clearer requirements or more stringent requirements. But when you're raising much less money, it doesn't mean that the risk to each investor is obviously the same. But the overall risk to the market, and I think from a regulator standpoint, while one of their main goals is to protect the individual investor, their bigger goal is to protect the market, right? To keep markets running smoothly. And in terms of the size, you're talking about unregistered, unlisted securities that aren't going to affect the overall market, and they're relatively small in size. So I do think that it makes sense. To be honest, I think it would make sense to have more of a global, where regulators agreed on a global safe harbor, where maybe it's 2 million, maybe it's 5, maybe it's 10. I mean, the number can be debated. But because we have technologies like this, technologies like blockchain and DLT that allow for this cross-border nature to happen. And you kind of you remove risks and you add risks. Mm-hmm. But the risks you remove, the disintermediation, huge risk right now. The fact that settlement can take days, weeks, or months, massive risk. So taking those risks off the table and adding on the risks that potentially you may have a higher amount of defaults, or you may have, in some cases, maybe higher amount of frauds. I guess you have to weigh those risks. But I think if there was a registration process, the risk of fraud is already diminished.
And it's on blockchain, so they're not going to be able to run away. It's the transparency and immutability.
Exactly.
You can't just set up, all these bogus companies backwards and forwards. It's
exactly.
Going to be on chain.
And with the system that's on DLT right now that's used for this CSD, the CSD has the ability essentially to stop the movement of any asset or cash or digitalized cash. The good thing is that not only are you, because to do real-time settlement, you can't have cash in a bank account and an asset on blockchain. You have to have both. So you use digitized cash or like something like a CBDC, a central bank issued digital currency. Those don't exist yet. So for now, you would say a stable coin or a smart token, some type of digitalized money versus a digitalized asset. So the auditability and traceability of those assets is immensely better than what we have now in the traditional market, even with the dematerialized assets and, generally speaking, digital money flow that we have now with SWIFT and all the other services. So you're getting rid of so many risks. You may be adding one or two risks, but I think the risks that are added, I think the pros far outweigh the cons in that instance.
Wow. And that's launching when? In the middle of the year?
End of July, early August will be the first issuance.
Yeah.
And it's a unique issuance, so it should be quite interesting.
Who's doing the first?
Sorry?
I spoke over you, sorry. Who's doing the first issuance?
So it's a company out of Japan called Tangible, and it is a small ski resort in northern Japan in a place called Niseko. And I'm not a skier myself, but I've heard it has some of the best powder in the world. And I guess people do flock there during the winter season. So this small resort's like an 8-unit resort. So it's more like an 8-unit condo resort that will be used as a daily renter for people going to the ski resort. That's, I think, within like a 10-second drive from the property. There will be a bond issued initially that will be used to actually build. So the land has already been acquired by the company. It's just a matter of getting the bond up and running so that those funds can be used for the construction equity. Once the construction is done after 13 months, the the bondholders can choose to either hold the bond to maturity, which is 2 years, or they can choose to move or swap into an equity-like token, which is called the growth token, which basically gives them access to equity-like, it's like an equity-like ownership. So you get access to dividends, access to revenue share, etc. The coupon payments on the bond are 5%. The estimated return on that growth token is between 7 and 9%. Obviously, there's risk with the growth token. It's not a fixed. Obviously, there's risk with the bond as well. But you're talking the difference between fixed interest and a variable interest rate. The cool thing is that the people who invest in the cooler thing, I guess, is people that invest in the bond token, or the initial investors in the bond token. If you buy it on the secondary market, you don't get this perk.
Yeah.
Or the guys who actually swap into the growth token get use tokens. So the actual property, then the usage, clever. the days that are used in the property, the actual nights are tokenized, and you get a certain amount of free nights every year that can either be sold on the secondary market for additional revenue or additional profit on your ROI on your investment, or you can use them like you would in a timeshare without having to actually pay for the use of the property.
So if that company wanted to raise money in a traditional way, could it? Or I mean, why would the company go this route? I mean, it's fascinating, but why would they go this route?
It could. So I think the point is with blockchain and DLT and capital markets already exist. So obviously they could go through some private placement memorandum, raise money through friends and family, do the bookkeeping themselves, have to handle the registrar themselves, the registry of their own shareholders, be able to handle kind of the settlement themselves, tracking of the instruments. Obviously, there probably wouldn't be a secondary market in this instance because there really doesn't exist a global secondary market for non-listed securities. There are, there are websites, obviously, like I said, crowdfunding websites, et cetera. Most of these focus on primary. So while you'd be able to raise that money and probably give away equity initially, and real equity, not just equity-like, you wouldn't be able to do something that's as customized as what we're doing here. And on top of that, you wouldn't have the ability really to really get down into the granular sense of how you want the entire kind of project to work as one. From the use, kind of, and I use the word tokenize, and obviously in a traditional sense, I'm not even sure the word you would use, but kind of, you don't have that ability to tokenize the entire project and then make kind of tie in not only that initial fundraising, but also into the usage, in this case of the property. So obviously anybody can raise funds. The point here is that this is allowing them to gain access. What we're trying to prove here, and obviously proving this on the first issuance is all but impossible. But what will be proved over time is that the reason why STOs, for example, or even traditional small markets, so regulated small markets such as A Milan in Italy, or the London Stock Exchange in London, or the small NASDAQ-owned exchange here in the Baltics, don't have liquidity, just like STOs don't have liquidity, is what we talked about, this siloed market. And the idea here is that CSD, that DLT-based CSD, Ignium, will be able to connect to multiple platforms in the future. multiple primary platforms, multiple secondary market platforms. And all those clients, all those investors, and all those issuers will all be connected in the same place. And that creates a massive liquidity pool.
Okay, so you could be attracting people from all around the world. It's not just
exactly, not only for your primary, not
yeah.
only for the primary placement, but also almost more importantly, for the secondary, because most investors, and I've raised money for countless number of businesses over the years, the first thing that any real astute investor asks you is, how do I get out? What's my exit? And there's almost no real good answer for that. I mean, you can come up with a great answer, but in reality, there's no good answer for that in the traditional sense, because it's just, we plan on perhaps selling out. We plan on doing this, but there's no secondary market usually for private placements. No. You can't just go and say, well, there's an active market, a liquid market where, if you no longer want to hold the asset, you can actually sell it to someone else. It simply doesn't exist, again, because of siloed markets for the most part. So the goal here is to create an unsiloed market, one single settlement source where the assets are settled globally. So it doesn't matter where your investors are, it doesn't matter where the issuers are, everybody kind of can feed off of that same massive liquidity pool. That's the goal.
Wow. That is quite revolutionary, isn't it?
It shouldn't be, but yeah, I would say it is. It shouldn't be. Even in the EU, we've had something called T2S, the regulation, which essentially was supposed to enable real-time settlement in traditional markets. The problem is nobody uses it. Because again, markets tend to silo themselves. And I don't know if it's because they think it's of benefit to them, because it really isn't at the end of the day, or it's simply because they follow, quote unquote, what works, right? Most market participants would tell you, at least the big boys will tell you that the market works because, well, it works for their advantage. I mean, it works for them.
Yeah.
But in general, it doesn't work for everybody else. And everybody else doesn't necessarily know it doesn't work for them because they've never had an alternative. So I would say, yes, it's the idea isn't innovative, because I'm sure many people have had the idea, but it's not the easiest idea to implement. And so something like a sandbox is a perfect place to be able to show that this kind of idea works. And the proven concept, I think, will change the way modern markets work. And that's the goal.
Yeah, no, it's interesting. And tell me, how did you find this company with their ski resort?
So actually, well, just like, so CoinMetro, which is obviously where I'm sitting in the office right now, our exchange. I'm a co-owner of Ignium, so that's the CSD. And I'm a co-owner because someone came to me with the idea, and I said, oh, I had that idea too. And then we actually put together a plan to actually make it work. Ignium is actually one of our co-founders here at CoinMetro, owned land in Japan, had the vision to actually build this years ago, actually, and couldn't get the fundraising off the ground for many of the reasons that we talked about now. And Niseko right now, the actual region is starting to expand rapidly. Jack Ma is building some, I think, 8,000 room resort or something. There's massive amounts of investment going into the region. So now is the time. But even now, Japanese market's very difficult for fundraising. It's very difficult. There's lots of rules and regulations. It's difficult to be able, especially as a foreigner, this person being a foreigner. So we happened to have a conversation, and it just came up that Ignium and the issuing and the whole story. So yeah, it's a colleague of mine.
So if people have ideas they want to raise money, should they come to you?
Yes, for sure. We are actively looking for issuers, and that's not just for, let's say, these regulated products. The cool thing about the sandbox is it allows us to operate almost any type of regulated product, and we can. I hate to use the word invent, but we can almost invent different types of products. So we can really go, like I said, granular on how we structure products. It can be very interesting. So anybody that has a background in structuring products can have a field day with how to create, different types of complex products on the backside that are very non-complex on the front, which can be quite challenging. But also even from things that aren't regulated, like the famous utility tokens and things like that. We can also do offerings like that. The great thing about that is that we can do them to a wider audience. So obviously regulations still apply, but under those safe harbor rules, you have a way, doing this, let's say, in certain countries can be quite costly. And during the research that have gone into setting this up in Montenegro, we found a way to do it quite, I would say, inexpensively to a growing list of countries in these first test cases. So it gives you the ability to market to a wide swath of countries which you might not have access to before.
And it's interesting because, it's, as I say, even that little element of the use tokens, as you're calling them there, so you can, primary investors, you can go into the bond, you can exit the secondary market, you can keep nights if you like. It's a nice little package, isn't it? It's inventive.
Yeah, I think it basically tries to encompass all the different aspects of the investment and put them into one kind of easy to follow system, so that instead of having to deal with lots of paperwork and having to deal with, the understanding or dealing with a lot of admin, having people that would book these nights, it all comes into a more automated fashion, right? An autonomous fashion because of smart contracts and DLT and all this great technology that everybody always talks about. So yeah, I think it's quite a unique project to start off with, because we hear a lot now about tokenized real estate, when in reality, I don't think there's been a real tokenized real estate project. There's been tokenized rights. There's been, different tokenization of underlying projects, but I haven't seen anything yet that kind of goes a bit deeper and tokenizes different aspects of the same business or same project.
Has this all been put in paper, or are you still working out the finer details?
Yeah, I think there's the tangible. The issuer has launched a website at basecampniseko.com.
I'm going to get you to spell that for me, or to send me the spelling. This Niseko.
I will send you the spelling, sure. And CoinMetro as well is working on a public marketplace as well, which will go live a few weeks before the offering, so probably towards the end of this month.
Wow.
So for now, yeah, the issuer has the website. Ignium itself, which is the CSD, also has a website, though right now I think you'd probably refer to it more as a splash page, mainly looking for additional issuers, because the goal here is to have roughly 10 issuers within the first 12 months.
Wow.
And
they could be anybody. So it could be a company looking to raise money, it doesn't have to be a resort, it doesn't have to be property, it could be anything.
Correct. For the most part, the initial issuers are most likely going to be bonds. And that can be any type of convertible debt or debt. And yeah, it doesn't have to be property, because in this case, the property isn't backing the debt. This is uncollateralized debt. So that means that, you could have a company that needs to buy new equipment and raise a bond to get that equipment. You could maybe need to do marketing, maybe you need to do whatever. It doesn't necessarily need to be any specific industry. For us, obviously, it's a bit about the narrative. So the more unique the business is, actually, that might be the best way to say it. The more unique the offering is, the more willing we are to listen. Because obviously a lot of it's about the narrative, right? Because at the end of the day,
I've got some ideas just percolating in my brain now. This is interesting.
Yeah.
Okay, so that's a shout out for people who are looking to raise bonds or issuers to come and talk to you, perhaps. And I'll share the different websites, the existing project.
For sure. I'll give you another example on the debt. So CoinMetro itself will do a bond also in August. And that bond will be simply used for operational costs and expansion on the CoinMetro side, marketing, et cetera. So again, not a property investment, obviously. And with CoinMetro, it's also a convertible. So convertible to equity at the end of 2 years at the current valuation. But we also add a bit of caveat, because obviously, again, it's about the narrative. So that a caveat there is the investor would have a choice. First, they obviously get fixed coupon, a fixed interest rate for those 2 years, given the fact that crypto is still considered to be a high risk investment in terms of when you compare it, I guess, to other, well, to be honest, if you compare it right now to traditional markets, I would say it's probably at par. But anyway, since for the most part, interest rates are going to be slightly higher for these type of products. Interest rates vary from, let's say, 8 to 12% on this bond, depending on some underlying qualifiers. So already a good interest rate for those 2 years. Secondary market trading, so you can cash out if you don't feel like holding it to maturity. And then at maturity, you can either go into equity, or you can choose to go into our native utility token. And what we will do is at the issuance date, we will lock a certain amount of our own utility token at a certain price, and it'll stay locked for those 2 years. So the bond itself, in conjunction with that utility token, are kind of adding some additional tokenomics to the native tokenization of our platform. And it gives people the option. They're either getting into equity, or they're going to get into our utility token, which they can then turn into cash. So it's in the secondary market as well.
Okay, so two questions for you. One is, so how do they know that CoinMetro is going to be here in 2 years' time? That's the
Well,
risk.
I guess that question, that's why the interest rates, right? Because obviously no one can guarantee any business will be here in 2 years, no matter its size or profit.
We could have pandemics again, whatever. Yeah.
Sure.
Second question is the secondary market. Is that you're creating that marketplace? Are you?
Correct. So in the first instance, with Ignium, the CSD in Montenegro, CoinMetro will be essentially an MTF inside that sandbox. So we will be a marketplace, secondary marketplace for what would be securities, tradable securities, or transferable securities, which are these bonds, for example, or equities or any other transferable security. With Ignium, the goal is to add additional MTFs, either in the sandbox or outside of the sandbox over the 2-year period. So again, the idea for Ignium is to create a massive liquidity pool. And that's not going to happen just with CoinMetro as its partner.
That was my next question, was liquidity in that marketplace?
So like any marketplace, when it starts off, liquidity isn't going to be exceptional.
Yeah.
But the goal for all companies, including the issuers, to be honest, is about building that liquidity pool. The reason why you haven't seen those liquidity pools built up as of yet, again, is because things are siloed. So you have companies that work in the US to build a primary marketplace for US securities. You have companies in Japan doing the same thing, in the UK doing the same thing. What you don't have is anyone connecting those liquidity pools. And that's a problem. And again, you have an issue with the fact that blockchain, peer-to-peer can happen on blockchain, but how do you maintain liquidity pools with peer-to-peer? What happens if everybody uses peer-to-peer? You essentially kill the liquidity pool. So the idea is that through a CSD, while you can still have some of the virtues of a peer-to-peer market, the liquidity maintains itself in one gateway, right? So there's one gateway where all that liquidity sits, flows, is kind of transacted back and forth, but anybody can connect to that pool. So, and people that want to gain access, for example, let's say the CoinMetro bond has been issued and some other secondary market platform gets interest from their clients to trade that tokenized bond. They can simply connect to Ignium and start to trade that bond by way of interconnectivity of liquidity. So liquidity from CoinMetro becomes liquidity on their platform. All their clients trading become liquidity on CoinMetro's platform, et cetera, all through the Ignium connection. And that's the goal. So it's very similar to how some traditional markets work, like FX, for example. And why FX? Well, FX is an OTC market, just like crypto. So many companies have tried to create this primary, secondary market gateway, or not gateway, but they've tried to create secondary markets and primary markets, but they've done so following the traditional equity and bond market structure. But those aren't OTC markets. So it just doesn't work because crypto has been born in this OTC structure. And it's very difficult to create liquidity in an OTC marketplace because, again, it's peer-to-peer.
Yeah.
You don't see most of the liquidity that's happening because it doesn't flow through any single exchange or any single gateway. So yeah, that's the reasoning for the structure.
That is interesting. I have several ideas off camera. I might be firing them into you. Oh dear. So thank you so much for your time today. It's great catch up. I didn't expect that. I'm not quite sure what I expected from the call. I had one quote I wanted to fire back at you because you're looking at a fee comparison and you're saying we're not here to hand over this new financial revolution to the boys at the top of the food chain. They had their chance. And now it's CoinMetro's chance.
Yeah, I think there always will be boys and girls, hopefully now, at the top of the food chain. But the difference is that, I think the old reign made their mistakes, and they did some good things too, for sure. But as we get older, we get too set in our ways, and I think now it's time for a new market to kind of take hold. And that's what's happening. And slowly but surely, that's what's happening. CBDCs, all the talk about digitalization of money and digitalization of assets. This all will lead to newer, fresher ideas, newer, fresher faces, and a whole new look on how markets should operate from the ground up. So that's exciting. A great thing.
Exciting. Wow. Well, thank you so much for your time today. I really enjoyed the catch up. And I'm going to be back in contact with you afterwards. I've got some little ideas. You're making me go, ooh, I can think of projects that might benefit from your structure.
I'd be waiting. I'll be waiting to hear those great ideas for sure.
Brilliant. Well, thank you so much indeed. That's Kein Murcko, who is the founder and CEO of CoinMetro, joining me today. Thank you for your time.
Cheers, Jenny. Thank you.